I am Jenna from the Tranel Financial Group. Today I have with me Tyler Braun, Senior Financial Advisor. It is May 6th, and I brought Tyler on here to talk about the market and all of the different fluctuations we've seen. So Tyler, if you could divulge and go into what clients have been asking and what you've been seeing with the market that's been happening, which has been definitely in full swing, no pun intended.
Yeah, lots of volatility last week in particular. And really it comes down to three main factors. I'm going to throw a fourth factor in there at the end. But first one is domestic inflation. The second one is rising interest rates. And the third is international inflation. And then I want to talk about the bond market as well. And I'm just going to give you some cliff notes, high level information here. So domestic inflation is inflation here inside the United States. And we've seen that increase pretty substantially year over year from where we were a year ago to where we are now, highest level really of increase in 40 years. So anytime you can see inflation going up at that pace, that simply means goods are costing more than they did the year prior. So if you had the same amount of income coming in and all of a sudden stuff costs 10% more, you're able to purchase less product. So inflation and hyperinflation is not good for the overall economy. The way the Federal Reserve curbs that is they raise interest rates. And by raising interest rates, their hope is to cool down inflation, right? So it's a tightrope that they're walking. When the Federal Reserve raises interest rates, in essence, what they're doing is strategically cooling down the economy, right? You hear that and kind of look sideways. Like, well, what does that mean, right? Inflation's an indication that the economy is overheating. So they need to slow that down. So if they raise interest rates, that means consumers are spending more on interest on mortgages, car loans, credit cards, etc. They have less cash flow left over. And ultimately, their desire to buy product goes down and the supply chain can fill back up. And if you have more supply and a limited demand, that means prices start to decrease, right? That brings inflation down. That's in a normal economy, Jenna. Okay. We are nowhere near a normal economy right now. So ultimately, when we look at that, the real driving force here in the short term has a lot to do with Russia, Ukraine, and China, right? So we're seeing international inflation really take off. So for example, if the Federal Reserve increases interest rates in the United States, that has no indication or no bearing on what Russia decides to do with Ukraine. And if we're sanctioning Russia and gas prices go up, right? Gas prices are something that are occurring regardless of what we can control here in the United States. And then in addition to that, same thing, right? You look at Ukraine, they export over 17% of the world's wheat production just out of that country, right? Obviously, if they're not growing wheat, that creates a food shortage. Interest rates going up is not going to curb that inflation. So definitely something that we're watching as well. And then the bond market, right? We have been in a historically low interest rate environment for over a decade, and we're starting to see interest rates rise. If my arm's a teeter-totter and interest rates go up, bond prices fall. And that's exactly what we're starting to see as well. And there's a huge bubble that's forming out there that people need to be made aware of. So, those are the four things that we're watching right now. Jenna, do you want to touch on the webinar that we're going to be doing coming up?
Absolutely. Absolutely. So we have a webinar coming up on May 17th at 11:30 a.m. Central Time. It's going to be Tyler talking more about the market, and we're going to really dive into really more of what you just talked about, Tyler, but there's going to be something that happens between now and then, and we're going to have better and further discussion towards it. So we really hope that you guys can come. Please attend and please ask questions, right? If you're thinking of it, someone else is most likely thinking as well. We'll make sure to put the link below for you to register as well. So thank you so much, Tyler. Please feel free to reach out to us with any questions. We're here to help you through this time. And we know that the emotions can be a roller coaster going with it, but that's why we're here to partner with you to help you feel secure and confident. The best way to reach us is 847-680-9050. Thank you guys so much and have a great day.